this. I'm not a bear. I'm long-term, as you know, an extremely optimistic person. But getting from here to the future, I think there's a couple reckonings, a couple resets. And to the extent that your viewers express concern about that, it's because they did okay in arithmetic in school. Anybody who did okay in arithmetic is going to have a very difficult time reconciling the net present value of liabilities at $150 trillion being serviced by a budget that's in deficit $3 trillion a year. It doesn't work.
In a recent segment, finance expert Rick Rule delves into the alarming trajectory of U.S. liabilities, which are skyrocketing at a staggering rate of over $3 trillion annually, surpassing $34 trillion in total. With off-balance sheet obligations included, estimates soar to a jaw-dropping $150 trillion. Rule emphasizes the critical need for attention to these figures, outlining 3 potential avenues for resolution: aggressive benefit cuts, debt repudiation, or inflation-driven currency devaluation. He underscores the gravity of the situation, stressing the necessity for viewers to grasp the implications, particularly in light of the growing distrust in the US dollar internationally. Rule's insights underscore the urgency of the situation and serve as a call to action for us to stay informed and prepared.
I think that voters are confusing 2 words in English. One called liquidity and the other called solvency. I'm, of course, nervous about the fact that the on-balance sheet liabilities of the U.S. are increasing at a rate of over $3 trillion a year, on top of the fact that existing on-balance sheet liabilities exceed $34 trillion, or $27 trillion net. It's interesting that when we use the phrase a trillion, it isn't an accessible number to most people. Their eyes glaze over. It's incomprehensible. And as a consequence of that, they don't know what to make of it. And as a consequence of that, they don't seem to get scared. What bothers me more are the off-balance sheet liabilities, the net present value of entitlements, social care, Social Security, Medicare, Medicaid. In other words, me, 71-year-old people who, with the exception of me, are beginning to consume more than they produce. The combined liabilities of off-balance sheet and on-balance sheet are estimated by the Congressional Budget Office to exceed $150 trillion. Now, there's only 2 ways out of this. You can cut benefits really, really, really aggressively. 3 ways, really. You can renounce your debts, or you can devalue the currency through inflation. My bet is some combination of the 3, but focused on the 3rd. All of those are unpleasant. And by the way, despite all this, I'm not a bear. I'm long-term, as you know, an extremely optimistic person. But getting from here to the future, I think there's a couple reckonings, a couple resets. And to the extent that your viewers express concern about that, it's because they did okay in arithmetic in school. Anybody who did okay in arithmetic is going to have a very difficult time reconciling the net present value of liabilities at $150 trillion being serviced by a budget that's in deficit $3 trillion a year. It doesn't work. Land/property, maybe, to the extent that money flows out of the U.S. market and makes credit less available, given that the real estate market is so credit dependent. You might not find the same response to real estate that you've seen in prior markets. I'm not saying you will or you won't. I disagree with the thesis that, I do agree that the U.S. dollar is becoming a less important trade mechanism than it was, but its former market share was 100%. And while we are doing our very best as a country to wreck our currency, we're thus far unsuccessful, because as idiotic as we are, we seem to be smarter than the foreigners. It is true that the Russians and the Saudis and the Persians and the Chinese and the Brazilians and the South Africans and all of these people are tired of being lectured by the morons in Washington. It is also true that the weaponization of the US dollar has meant that increasingly people whose policies are at odds to American policies want to find exchange mechanisms outside the US dollar. My experience has been doing business internationally for 40 years. As much as they distrust us, they trust us more than they trust each other. And I would suspect that fears of, as an example, the BRICS currency eclipsing the US currency in my lifetime, I'm a very healthy 71-year-old, are very, very, very overblown. The liquidity and the transparency and the depth of the US dollar debt market is so deep that my suspicion is whether other people like it or not, they're going to use it. Will the Russians occasionally settle an oil and gas sale in Chinese renminbi? Yes, to the extent that they could turn around and spend that renminbi. Will the Russians acquire substantial amounts of renminbi denominated debt? Or more importantly, will the Chinese add on very many 10-year ruble denominated notes? Almost certainly not. The increase that you've seen in the gold price in the absence of any retail buying in Western Europe and North America is testimony to the fact that global central banks, reacting to the weaponization of the US dollar and not trusting each other on Monday to fulfill their obligations on Tuesday, are seeing that they have no alternative but to increase their gold holdings, both as a store of value and as a medium of exchange. If they succeed in establishing central bank digital currencies, then there's no saving us. At least there's no saving us in a formal market. Then the people who bought large quantities of junk silver will have their revenge. You, in that circumstance, won't be able to use a kilo bar because you won't be able to make change. The combination of a central bank digital currency with the social credit technology that the Chinese are employing today means that if the federal government didn't like the way that we spoke in an interview, or didn't like the drugs that we either bought or didn't buy, that they could in fact cancel our currency. And this is truly scary. Mercifully, and this will get us some more hate in the comment section, there are 400 million guns in private circulation in the United States. And I don't think in the near term that Congress has the courage to do a wealth transfer of the order of magnitude that would be suggested by a central bank digital currency. I'm taking no chances, as a matter of fact. When I go into a restaurant and tip a waiter or a waitress, I tip them in cash. And I tell them, this is not a tip, which is taxable. This is a gift, which is non-taxable. You should report this if you believe that the level of service that you get from the government exceeds the price that you pay for it in tax. Otherwise, you should regard this as a gift. I spend cash at small businesses because I want small businesses to understand the importance of tax and cash in their business. In other words, I'm actively engaged as a propagandist by my own action against central bank digital currencies and laterally taxation.
Today, we delved into the critical issues surrounding U.S. liabilities and the looming currency crisis with finance expert Rick Rule. From the staggering increase in on-balance sheet liabilities to the potential repercussions of central bank digital currencies, Rule painted a vivid picture of the challenges ahead. Remember, understanding these complex issues is crucial for informed decision-making. We appreciate you joining us for this insightful discussion. Don't forget to subscribe for more in-depth analysis like this video if you found it informative, and share your thoughts in the comments below.